One thing which I find misleading about the textbook is how it presents, or the AQA, accounting for AQA textbook, is how it presents the purchase budget and the reality of what I think a purchase budget question could be. This hasn't come up before. So in the text page, it just says you produce a certain amount of units, it costs this much per unit to purchase, this is the purchase cost. For me, that's not how a purchase budget would be presented, because there could be a difference, as in the amount of kilos you need for production, and then a change between opening and closing inventory for purchases. This has come up as a multiple choice question before, and definitely could come up, I think, as a 4 marker or as a section A, just quick purchase budget. But it can be a little bit awkward, and as the textbook isn't fully preparing you for it, let's have a little chat. So we've got the production budget of a company, and it plans its raw material purchases for July and August. They purchase flour. So they're going to yeah, this is pizzas. If you looked at other ones, this is an AI thing that just rolled through, but it's useful. So we got the production for the pizza, so 5,350, 6,250, and 5,400. Each pizza requires 0.4 kilograms of flour. So you're going to multiply the amount of pizzas by 0.4. That's the kilograms needed. Opening inventory in July, so we've got 400 kilograms of flour currently. At the end of each month, we must hold enough flour to cover 10% of the following month's production needs. Okay, so in the August budget then, so we're going to start with, in July, sorry, opening inventory of 400, so we don't need to purchase that, so we'll take it away. And then what we will do is we've got to work out how much we need for September. So we need 10%. So 6,250. So if we do that times 0.4, it means we need 2,500 kilos. So we need 250 kilos of closing inventory. So if we then look at July's, so we've got 2,140 kilos that we need. We've got 250 kilograms we need to produce of closing inventory. We had 400 kilos to begin the month with. So actually, we don't need to purchase as much as we would think. So we only need to purchase 1,990 kilos. When it goes into August, we've got 2,500 kilos that we need, as we've already worked that one out. And we've got 216 kilos of closing inventory or closing stock, because we are going to work out September. So 5,400 times 0.4 is 2,160 kilos. So we only need 10% of that. So 216 kilos of closing inventory. So 2,500 plus the 216 less the 250 that we started the period with means we'd need to purchase 2,466 kilos of flour. So just keep that in mind. The adjustment is very similar to a production budget, but just a slight few extra steps. Just keep that in mind. Benefits for purchase budget: we can budget the outflows for materials, which is good. We know how much we're going to spend. We can use that to negotiate discounts. If we're buying more, we can get maybe an extra bulk discount. We can make sure we've got enough for production, which is key, because that's what we're going to run out. That's that coordination part of the budgets. However, it's reliant on others. So if the sales was inaccurate, or if the production budget was inaccurate, we can have too much or too little. Inflation can drive the cost of these purchases up. We've just looked at in kilos. The next extension on those would be multiplied by a cost per unit and say purchase in pounds. And so obviously that can cause an issue. But we can have an external factor which could cause a shortage, and maybe we can't buy that much material. And so we've got a reliance on those suppliers that they'll produce what we need. But purchase budget, it's not massively complicated, but just if you're relying on the textbook, it's not completely accurate. So make sure you can work through these type of scenarios. Okay.